Something weird happened today on the chart using the accumulation distribution and on balance volume indicator in crude oil. So let's talk about it. So good evening again, everyone. Futures Brizio here just after 8 p.m. on Wednesday, April 9th. Hope everybody had a great day. And as before we get started, as always, make sure you smash that like button, subscribe to the channel, and any questions, comments, leave them down below. I made a video last night regarding the accumulation, distribution, and OBV indicators, and I'm not going to rehash it and go back and watch that video. These are basically volume indicators, leading indicators that also have a price component. So they're not traditional volume indicators, but they do use volume as a major factor in their calculation. Again, I'm not going to revisit. You can always Google both of these indicators. They've been around forever, and figure out how they're calculated if that's important to you. But just understand that they are volume price-based indicators. The other thing I wanted to say is I realized last night the video I recorded, which I'm not happy about, had basically an echo. What happened was I got this new webcam, and the webcam microphone was running, and in addition to this microphone that I'm using in front of my face. So it was recording audio on two different streams. So it's very annoying, and I apologize. I really don't want to go back and remake that whole video again. But essentially it was a day trading scalping strategy using these two indicators on like a 5 to 15 minute time frame. But I'm going to show you this, the same two indicators tonight, but we're going to just talk about the little bit higher time frames, okay? Because like I said last night, you certainly can use this in a very untraditional way to scalp. I actually took two trades doing it using the scalping this morning at the open. I was pretty much break even for the day, so I'm still back testing in, that strategy and to see really if it's viable long term. It's a very unorthodox way, like I said, to use those two indicators, so we'll see. But one of them was about 2 ticks away from hitting my take profit, which would have been a really nice trade, and I was away from my charts. I had set my take profit, and it missed it, and it came back, and I lost. I gave back about 2/3 of what I had open profit on. I did end up closing it, and then the other one I closed with a loss. So because of that first one, missing my TP, I ended up breaking even for the day. But had it hit my TP, or I had closed it near the TP, I would have been green on the day. So that happens. So anyways, live and learn. Like I said, I've got to keep testing this strategy. Okay, so this afternoon, early this afternoon, I happened to be on the charts. I did not trade it just because of the time of day. Crude oil had a very big rally, and you can see this 4-hour bar here. This was this afternoon. Let's see what time that was. It was like mid-afternoon New York time, 1600 hours. That's when this candle opened, so it closed at 20, which would have been, like mid-afternoon. So this was like mid-afternoon New York time today. Just out of the blue, crude oil shot way up. I did not trade it because although I literally was watching the candle form, and it did end up closing near those highs for the day. And I didn't trade, like I said, because of the time of day, and I was just like, whoa, what is that? And so I started poking around in the news to try to figure out what it may have been, and I think I discovered it. It was the Trump tariff talk. So basically what he did today was for 90 days he suspended all the tariffs except for 10% on every country except China, which he raised the tariffs on China even further because China retaliated too. And so I think that the crude oil market read that as a positive because, potentially there'll be more trade, more need for transportation, more production, which uses oil, all those things where that oil feeds into in terms of energy and production. So, talk about relieving tariffs drives up the energy markets. Okay, so that's the only thing I can figure. I'm sure that's why it was right around that time. So let's see if we get follow through on this going forward. But besides the fundamental factor, I wanted to talk about the technical factor looking at this at these two indicators. And 1 second, guys, I just got to fix something with my camera. Okay, I just wanted to adjust that a little bit so it wasn't cutting me off completely. I got to work on blurring the background here, but there's nothing in back of me really. You want to look, it's just a couch and a picture on the wall. So anyways, okay, so what happened, like I said, is fundamentally is not really important, but look at these two indicators. Now this is the 4-hour chart. So I want to talk about using these two indicators on a longer time frame, because the video I made yesterday was like a scalping day trading video version of this. But certainly I think these indicators were originally intended to use on longer time frames. If you go back and look at people showing videos on how to use this, certainly I don't think they're using, charts down in the minutes to use these. They're using, hourly plus to daily charts, etc. To use these. But very interesting thing happened, especially visible on this 4-hour time frame. And I noticed this again even before the market rallied. I was very curious about this because it only showed in crude oil. And that's this, right? I want you to concentrate on basically these two areas of these indicators right here. And the top one, the brown one, by the way, is the accumulation distribution. The bottom green one here is the OBV, the on-balance volume. And just look at what these two days. So the accumulation distribution actually came down, has been stair-stepping down with the price, and put in a new low this afternoon prior to the rally up. Okay, so this would have been like the noontime close. So the 8 a.m. to noontime candle was probably right here at this bottom. But look at the OBV. On this last pullback back here, okay, where we had the accumulation distribution line, okay, came down, okay, right here we had the AD line trend down. That entire time the OBV was pushing up. Very, very interesting. And we had a higher low put in right here, and then we had a super high low put in right here. And like I said, I saw this morning prior to this big rally in the price, and I was like, wow, that is weird. Where again, we had the, prior to that, like basically yesterday, we had the AD line going down, the OBV line going up at the same time, with a very supposedly very similar indicators that otherwise, as you can see, track very closely. If you just look at all this prior price action and these two indicators, they track very closely. Very unusual. And I'm at a loss. I'm assuming it's how these things are calculated. That would explain that. But to see two so similar indicators diverge like this is very unusual to me, because these are very similar indicators in terms of what they're supposed to show. But clearly it has to do with the way that it's calculating. And so does that mean that the OBV is better? I don't know. Than the AD? I don't know. That's why I have both of them on the chart, and I'm going to keep both of them on my charts for now until if and when I decide either to not use them, or if and when to decide that one is better than the other, and maybe one would be better on one instrument and not on another one, but we'll see. So again, we had two warning signs on the OBV that crude oil might go up. We had this higher low put in right here, down here, which we did not get on the AD line. And then we had, actually, so 3 warnings. Then we had the OBV going up while the AD was going down. This was yesterday's price action. And then we had another significantly higher low put in right here, okay, and a higher high when you want to be technical. So there's actually 4, because when the AD line, let me take these rectangles off just to clean this up a little bit. When the AD line came back for this last retracement, it was a normal, lower high that was put in right here, right? We had a normal lower high that led to a new low. Well, look at the OBV line. When it came back from that last pullback, it came way up here, and actually this peak right here is higher than these two peaks. So this is actually a new high, and then went down and made a higher low, and then of course the big rally today. Now both indicators reacted to the rally, which doesn't surprise me, right? This steep move up and then this one. but it's what preceded that for the last, probably 24 hours that really is the most interesting. Now, like I said, this is the easiest to see on the 4-hour chart. You can go through other time frames and you can see it, but in terms of clarity, the 4-hour maybe down to about basically somewhere between like the, probably around like uh, the 3-hour chart. We did get that higher low here and that higher low here, but you can tell it becomes, and we had that big pullback, but it doesn't make a new high. And then we get this higher low here, and then price goes up. But the 4-hour is where this really sticks. You can go to the 6-hour, the 8-hour, you can see it there, but you see the lines start to smooth out because we're getting higher up in the time frames. If we go down to a shorter time frame, here's the 2-hour, the 1-hour, all right, they start to look more similar again. But technically the higher lows are still there, like this one right here. It's just not very obvious. So, and you can see again, how clear these things track each other. They're almost identical besides that. Minor fluctuations. But if you look at this move up and this move down, and you look at both of these, see how close they are. So there's something about this 4-hour chart that's very intriguing. Does that mean it works better on the 4-hour? I don't know that either, to be honest. I don't think these are meant to be used on any specific time frames. Although I will say, though, when I originally researched these two indicators and I was looking on other websites with supposed trading people talking about these indicators, a lot of the screen grabs they had were 4-hour charts. Okay, here's the daily. Now, in futures, daily charts are not very helpful. But if we go to the 12-hour, we can see it here on the 12-hour. We can at least see that higher low that was put in when the accumulation distribution line put in this lower low here. The OBV line put in a higher low here. Okay, and these pullbacks, the pullback was more significant leading up to that. But the particular interest was this higher low. So again, basically from about the 4-hour chart and up, you can see the OBV diverging from the AD line. Okay, again, just a notation. Don't know what that means. Don't know if that's particular to crude oil. However, just for a laugh, I started looking at other charts just to see, basically on a 4-hour chart. So here's copper. This is the 4-hour chart of copper. You can see copper also spiked up, probably for the same reason, for tariff relief, because obviously copper is an industrial metal, and so if tariffs are going to be relaxed, then maybe global trade will increase in manufacturing, and therefore more demand for copper. So I think all this big down move was all tariff driven, and this was kind of the relief valve right here. Now whether this follow through, we'll have to see. From a price structure point. On copper, we're sitting back at this resistance area, so we'll have to see if there's any follow through or if that's just a temporary pause. But again, I'm not really looking so much at the price. I'm just looking at the indicators right now. And again, here on this one, unlike crude oil, pretty much are tracking the same. Okay, so that's copper. And then if we go to natural gas, again, very, very similar. You can just look at these going from in the past, this, kind of trending down, and the pullback and down, same thing, trending down, pullback and down. Here was today. We had that last little peak down right here, and then the big rally. Again, natural gas rallied, probably for the same reason. But again, it is back to a previous resistance level. So we'll have to see if there's follow through. But again, just looking at the two indicators, I don't really see that divergence going on, at least on the 4-hour chart with these two indicators. Even here's the 1-hour, they look pretty much the same. Here's the 8-hour. The OBV has more detail on the 8-hour versus the AD, but essentially they still got to the same place. Okay, so it's just that the OBV is providing more detail here. We had all these pullbacks here, which you really don't see on the accumulation distribution line, at least on this time frame. And again, guys, I'm sure that has to do with how these are calculated. Okay, that's really all it is. They may use similar parameters, but the formulas are different. And when you change time frames, the time is feeding into those formulas too, because if you look up how they're calculated, there's a time component too. There's a time component, there's a volume component, and price change within that time, okay, because there's a look back period. And so that's what's driving these differences. But again, I'm just showing you that relatively speaking, there's no change. These indicators pretty much agree with each other with slight variations, but the general direction they're moving and the peak formations, highs and lows are pretty much the same. We can even go and look at something like live cattle. This is the April chart, which they're not allowing you to take any new trades on this because it's expiring. But again, this is this is a commodity, livestock, something completely different. And I have traded live cattle in the past. I'm not right now. I just wanted to pull up another random chart of something today just to look at these indicators. And again, even here, they are pretty much the same. The OBV is a little bit more reactive, as you can see. The AD was like through here was pretty much level, but the OBV was trending down with this downtrend. But they both pretty much, since this low put in right here, have pretty much tracked exactly the same on this time frame. So it does seem to be isolated, at least with these assets, to crude oil. And I just find that very interesting. Oh, the other thing is sometimes I trade the regular contracts or the minis on like crude oil and stuff. But when I have indicators like this, I put them on the main chart, on not the micro or the mini. I put them on the full contract, even if I'm not trading it. So you can see here, CLEK. I don't think you can see that because my picture is covering it. But this is crude oil. This is the full contract, the CLEK 25, which is the May contract. Okay. For natural gas, this is the full natural gas contract, not the micro mini. This is NGEK. And then for copper, this is the full copper contract, which is CPEK 25, which is the May contract. Okay, I don't trade off of these, but when I use volume, any type of volume indicator, I want to see the full contract. I don't want to look at a micro or mini. They may be the same, but there could be differences because, again, the traders, the players that drive these markets are not trading on micros. They're trading on the full contracts. So I want to see the volume and the reaction on the full contract, not the micro or the mini. So like I said, that's why I have, all these different windows down here. Although, again, I know you can't see them with my picture. But I've got, 2 crude oil, 2 natural gas, and 2 copper charts open. But one's the mini and one's the full contract. Live cattle, on the other hand, has no mini or micro. So this is the full contract. This is the one you would have to trade off of too. Which is why you don't want to trade this asset unless you know what you're doing and you have a decent size account, because you can lose a lot of money super quick on this. So just, as an FYI. But again, I just opened it because I just wanted to look at the indicator. So that's the main thing I wanted to show you. It's really super interesting. The other way that's really good to try to trade these, although is using divergence. Okay, that's a big way that people like to try to use these indicators, kind of like you would use an oscillator. But you can't really cherry pick these these things. So because like here on copper, when this market peaked up here, when the market peaked up here, the both of these indicators also peaked. So there was no divergence here before this big drop here in copper, at least not on this time frame. If we go to a shorter time frame, even on the short time frame, here's the hourly chart. I still don't really see the divergence here. So even though that's one big way that people like to use this, I don't find that always works. So let's just take look at a couple of other ones of these. Let's go back to crude oil here. And let's look at this peak high over here before this big drop. Price, was coming down. It pulled all the way back up here. And then, this one actually was okay because we technically were in a downtrend here and all of this was just a pullback. But you can see on the indicator we had this high right here on price. Okay. And then we had this high on the indicator. Okay. And then you go over a little bit further, we had an equal high. I wouldn't say it's a higher high, although it might be. Right here on this candle. Okay. We had this high put in right here on this candle, and actually that might be at least the high. It didn't close at the high. But let's see, that was 72.28, and over here we were at 72.10. Yeah, so this technically was a higher high. So this is good. And then you can see right here on the indicators, at least on the accumulation distribution, we put in a lower high and then the price dropped. Now what's interesting is the OBV did not give us that. Here's the OBV. Here's that second peak right here. And it's actually higher than the previous one right here, which would have lined up with this high. So you can see that sometimes these things do not agree with each other, which is why I'm leaning that if I continue to use these indicators, then I'm going to have both of them on the chart. Because, one might show me something that the other one is not, or vice versa. And so I want to make sure that I have the full picture and not limiting myself. And they're very simple indicators to read, so it's not like they're cluttering up the price action on the chart. They're down below here. I can always shrink them down if I don't want to look at them. And then if we look at natural gas, let's see here on natural gas. Yeah, we did have divergence here. We had this high right here. It's a little tough to see it because the prices move, so my charts are trying to adjust this. So it's a little hard to see it here, but you can basically see right here we had this high right here and then this high here. So we put a line right here. We had higher high, higher high. And go over here to the indicator. We did technically have divergence right here. Okay. And did we have it on the OBV? Yeah, we did. Not nearly as obvious though, but it technically is a little bit lower. So again, it looks to me like OBV is not as good for divergence. So I mean, I'm starting to learn this stuff that, okay, the AD line might be a better indicator for divergence, but the OBV line might be a better indicator for potential overall trend reversals, that might be coming. Or you can say the AD line might be better for signaling a trend continuation. Like if this was overall in a downtrend, let's say, but all this was moving up, that the AD line might be suggesting the end of the correction. Okay. And so, that might be the thing. Okay. The AD line I use for divergence, trend continuation or reversals. But the OBV is better for, overall trend reversal. So if we go back to crude oil from today, we definitely had divergence here. So in this case, we definitely had divergence on the OBV right here, right? Price put in a lower low, but the indicator put in a much higher high. But we did not see that on the accumulation distribution. We saw it up here originally on this, on the accumulation distribution up here, but we did not see it on the OBV. So I don't know what that means. Again, I'm sure it has to do with the calculation, but what it means to me is essentially if I'm going to continue to use both of these indicators, I'm going to use them together. And because I don't want to miss something, I don't want to miss a potential entry, but I also want to use them to confirm the other one. Because when they're in line with each other, they're very reliable in terms of like suggesting trend continuations. If you're in the middle of like an uptrend, these are both really, the OBV gives a little bit more detail on the way up, but they're both in agreement that this uptrend is intact. Okay, but when they start to when there's divergence, in this case there is divergence on the AD here, but not on the OBV, then I want to be able to know that and say, hey, maybe this trend's about to reverse, and I'm not going to go long right here because it's about to reverse, and it did because there was big divergence on the AD line. If I was only following the OBV or just the price action here, maybe I'd be like, oh, that's probably not good. I don't want to take a long there. And at the same time down here, we had price going down, and we had the accumulation distribution agreeing with that. Say, oh yeah, okay, the downtrend's intact. That's great. Look for short entries. But the OBV gave a warning long before that, that, hey, you might want to just keep in mind that this thing might be turning soon. And when this came down and formed a new low on price, and the OBV was way up here, that should have been a huge red flag. I missed it because I've just started experimenting with these, and I just did not, believe that this was actually a signal that we were going higher very soon, and it did. Now again, whether this ends up being sustained, because like all the other ones, we're up at resistance. We're back at these previous highs. This previous big high price pushed right up to there. So is this going to reverse and come back down? I don't know. We'll see. But either way, this would have been a sweet trade. You would have been in for about 4 hours and, made bank, got out back at these highs and just got out. You could have held this trade from this afternoon right up to about where we are right now. And that would have been a perfectly legit trade, even if it ends up not, sustaining, and this previous swing ends up holding, price turns and rolls back over, which it might. I'm not saying this is a new uptrend. Clearly, this was a reaction to news. So it was more of a sentiment play. Oh, I need a drink, guys. So, anyways, I'm going to wrap this up soon. So the bottom line is you can use this for scalping day traders. I talked about yesterday on the shorter time frames, using that opening range from the previous day, basically from 2 or 3 o'clock the previous afternoon up until the New York Open at 9:30. You kind of draw out horizontal lines on the indicators, connect, one horizontal line connecting the highest point of that range, of that time zone, and one underneath connecting the bottom, and you just see how price reacts when New York opens. Does it break out of that zone? Does it come down, tag one, and you trade the fade away from it? So that's one play. That's what I talked about yesterday and what I did this morning on those 2 trades. Or if you want to, again, focus on, continuing to swing trade, and, not have to, be stressing about day trading and scalping. This is one way to do it too. Wait for, either use it for trend continuations on these little moves down, on these little pullbacks. They jump in, or on the way down on these pullbacks, or just sit and wait for divergence, right? Sit on your 4-hour chart, wait for one of these indicators to show divergence, and then, your antenna should go up at that point and say, maybe I should see if we're going to diverge here at some point, and look for signs of that. You go to a shorter time frame and look for an entry, if it looks like that's happening. We had that right here. If we go down to the 1-hour chart, we look at that area right here. We had this big bullish candle right here after this little, weak move up. Bullish candle, a little gap, broke below structure. Anywhere in here, a little pullback. Basically anywhere in here was a perfect entry, and you could have rode this all the way down. And you can see the indicators would have kept you in these trades too, because we never had really any divergence on the way down until we got down to here on the 4-hour chart. So anyways, I just wanted to point that out. Found it very interesting, and it forced me to take another look at these 2 indicators on higher time frames and begin to form some opinions. And like I said, my opinions are that you can use them on high or low time frames, but specifically with the higher time frames, I would definitely recommend using both indicators. because depending on the market conditions and the market itself, and maybe even the time frame you're looking at, you can get a completely different picture. And if they're agreeing with each other during a trending market, beautiful. Stay with it. Trade the pullbacks, jump in at the pullbacks. But the minute they start to if one starts to show divergence against the other one, that should be a big warning sign, because you may not see divergence on both of them. You likely will only see it on one of them. And that is your sign to, hey, if you're in a trade, you might want to think about getting out. Or if you're looking to get in on a divergence trade, a counter trend or a trend reversal based on divergence, the one that gives you that signal is the one you want to follow. In this case, the AD looks like it gives more divergence signals, but it's funny, on this one chart, it did up here, but it didn't down here. The OBV, just the opposite. It did not give us that divergence signal here, but it gave it to us over here. So take that for what it's worth. So anyways, guys, that's it. We're at 31 minutes. I think that's more than enough. So I'm going to leave it there. Hope you have a great night. I'll be back with some more analysis if there's anything worth reporting as I continue to backtest these, and I'll continue to play the short-term trades in the morning if it looks like it's working out. But I will be keeping an eye on these 4-hour time frames for longer-term trades and divergence opportunities. So smash the like button, subscribe to the channel. Questions, comments, leave them down below. Have a great night, and I'll talk to you soon.